Good afternoon. Happy Friday. This is Sean LaBelle of the Decker Hewitt Group. It was a positive week here, despite again a pickup in volatility, which remains to be the trend of the month. Of course, we had that 5% correction a few weeks back. Markets have largely consolidated since then. Of course, moving markets has been earnings, which are coming in actually better than expected. Some of you will recall that this has kind of been the potential catalyst that would have seen that 5 to 10% correction was downside earnings revisions for Q3. These are, however, coming in considerably stronger than expected, mainly out of the financials thus far, which have been sort of the big sector to have reported this week. We do have a bit of tech in the energy side set to report next week, so we'll get a bit of added color on that. In terms of this week's Market Watch Weekly, just runs through some of that commentary that I mentioned there. Really focuses on energy, which of course is really in the spotlight right now. Oil is trading near a 7 or 8 year high. Gas is also through the roof, multi-decade highs there, while coal has absolutely skyrocketed to all-time highs. So we believe there's a number of factors at play here. We don't think this is entirely sustainable. It's one of those self-fulfilling prophecies that higher prices beget increased production, which begets supply, and then in turn you obviously get the downturn in pricing. We've seen this happen a number of times over recent decades, so this is why we don't necessarily think that these higher prices are necessarily here to stay. So this week's Market Watch Weekly just runs through all of that. We encourage you guys to have a read. Enjoy the weekend. Hockey is back. Go Canucks go. We'll talk to you again next week. Cheers.